Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES September contract. We have rolled over to the September contract today. I'll be quoting September in my room, and probably a lot of people will be on Twitter or wherever you trade. As far as yesterday goes, yesterday was the most complete day that the Bears have put in a couple of months. They can't take today off, though. They really have to continue to finish the deal. Probably the least helpful thing they could do for themselves, though, would be to have another big down day today. What they need to start to show, if we're going to have a meaningful pullback, is that, we start putting in some AM highs, some morning highs versus those morning lows, and that those morning highs get sold and we make new lows. It's the same dynamic that we use going up. But when markets go down, that's what they do. They make highs in the morning, those highs are sold, and new lows are created. So with respect to the September contract, here are the key areas. You've got yesterday's low, which is 17.5. I have been talking about closing on the June contract below 30, which we did, and we've traded below there essentially all night long. The easy conversion from the June to September contract is just 7.5 handles. Okay, so we're trading September 1921. That's basically June 28.5. Okay, so that's a good way to think of it throughout the day. On the downside, the key area is that old June floor of 1916. That plays out to be about 1909.5 on the September contract. What's the middle band on the September contract? 1909.90. Okay, so the middle band is matching up with the old floor. If we get there today, the Bears have really got to crack that area and ideally close below that area in order to demonstrate to the market that they mean business. A close below middle band today would be pretty impressive. Just like getting through the weekly pivot at 37 and getting below 30 yesterday was impressive. Today would be very impressive to do that. What would be counterproductive for the Bears would be to either go down there and then give up a significant bounce, like a bounce in excess of 5, 6, 7 handles. If you start giving up 10 handle bounces down there, then that's going to embolden the dip buyers, and essentially the pullback will be pretty much over at that point. You also don't want to see a massive sell-off today that cracks through those areas and is then rejected. That will create a hammer on the chart, and we'll take off from there. The best case scenario for the Bears is, like I said, to continue a gradual stair step down. I said a few days ago the market may not owe you more than a middle band test, though. That may be today. That may be today. If the Bears can get below, then the next natural area to look at is going to be the 50-day exponential moving average on the continuation chart, which is in the 1894 area. We've bounced off that 5 times, and I will have my radar up on that one if we can get below middle band. And that as it stands right now, is a significant if. What's the task for the Bulls? Well, to bounce it off middle band, but then on the way up, if you get back over 30 on the June, basically 23 to 22.5, you get back up into the weekly pivot. The conversion on the weekly pivot on the September contract is, around 29.5 to 30 quarter. You get through that area, and you put the weekly pivot underneath you, then you can begin to build upward momentum into next week. So we've got a little bit of a pullback. It's about 1.5% off the highs. But the real issue is, can the Bears follow through? Or are the dip buyers going to come in now that they have a little bit better area to come in and buy? Are they going to come grab it? Time will tell. Everybody have a fantastic day. Have an amazing weekend. Follow us on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. I'll be back Monday morning with another webcast. Trade 'em well, everybody.